Hello and welcome to XM.com for the weekly outlook. I'm Christina Marujas, and joining me today is investment analyst Marios Hadjikyriacos. We'll be having a look at the week ahead. Marios, I think it's safe to say that we're entering a phase where politics are taking central stage and may even dictate market developments. The U.S. election is only a few weeks away, and it looks like we won't be seeing any more fiscal support before that, despite the Fed's repeated pleas. Whereas in Europe, virus cases are rising and the ECB is reluctant to do more. So how do you see winter playing out?
Hello, Christina. Well, it's certainly been a very exciting September. The stock market started to sell off early in the month. It started out on concerns that the tech sector was overvalued, that valuations have gotten out of touch with reality, but it quickly broadened into a risk-off episode as markets came to realize basically that the US Congress isn't going to deliver another relief package anytime soon. Why? There's a Supreme Court fight lately in the US that has poisoned politics in a sense, and it's overshadowing everything else, and the chances of getting a bipartisan agreement between the Democrats and the Republicans while this fight is going on look very slim. Now, in my opinion, that's a relative statement, because if the stock market continues to kick and scream and we fall another 10% from here, for example, then the chances of stimulus would suddenly rise, because that would put way more pressure on the politicians. But it's not just the US, we also have Europe. Virus cases have risen dramatically in countries like Spain, France, the UK as well. In many cases, the numbers are much higher than they were during the first wave, and the risk now is that we may see new lockdowns. And the bigger risk is in fact that we may get new lockdowns, but without the full fiscal support that we saw the first time around. The governments are running low on firepower, debts are rising, and the central banks as well, they've gone from all in during the initial panic to more of a check position in poker terms, meaning that the message from the ECB and the Fed lately has been, yeah, we've done a lot, we think we've done enough for now, and we may not do anything more in the immediate future. The combination of all of this has markets really freaking out. There's also the prospect of an indecisive US election. Trump is refusing to commit to a peaceful transition in a sense if he loses, and if he takes this to the courts and it ends up in the Supreme Court, we may see a prolonged deadlock there because the Supreme Court is missing a member, and that could create a constitutional crisis. In the middle of all of this, stocks are selling off. Investors are suddenly warming up to the dollar again because of its safe haven qualities. And I would argue that from a euro-dollar perspective at least, there's not much in the way of another test of the 115 zone, for example, purely based on how European versus US infection trend is moving. Now, having said all of this, we might see this risk aversion continue for the time being, but I think this will be a relatively short-lived episode. Once the election is out of the way, we will most probably get some stimulus deal, and the Fed is likely to do more eventually. Plus, we may see good news on a vaccine before very long, and that could help cheer up the markets eventually.
It looks like the next coming weeks will have a lot of developments. Of course, we'll stay up to date with what's going on. But for now, let's have a look at the week's calendar. We have the very important U.S. jobs report coming up. What do you think we'll see in the numbers? And could this report offer any support to the dollar?
I actually think so. So the forecasts are for another decent report, almost 900,000 jobs to have been added. That would push the unemployment rate down a little bit. And all of this is also consistent with what smaller labor market indicators have been showing, initial jobless claims and the sorts. That might help the dollar recover some ground, but I would stress that its overall direction will be determined by risk sentiment. The negative correlation between the dollar and stocks has returned. So the dollar is acting like a safe haven. It moves in opposite direction to stock markets. So I would argue that the overall determinant of the dollar will be whether this panic and this anxiety that we're seeing in the markets sticks around. Now, another thing happening in the US is politics. Trump will meet Joe Biden for their first debate on Tuesday, and I think that investors will be looking very closely because it will give us a sense of what to expect from the actual election outcome.
And last but not least, let's have a look at the Brexit developments. Of course, they are one of the week's highlights, with the UK and EU going back to the negotiating table, which is a bit encouraging in itself. Are we closer to a deal, and how could these negotiations affect the pound?
Well, we're closer than we were a month ago, so there's been a lot of drama in the Brexit process lately. Boris Johnson tried to play some hardball to get concessions from the EU. It didn't really work, but lately the noises from both sides have been more conciliatory. Negotiators on both sides are saying a deal can still be found, and in my own view, a deal is still the base case scenario. However, I think there's going to be a lot more drama until we get there. In this negotiating process, concessions usually only come right before a crucial deadline, and we are not there yet. I think that for concessions to be made, we have to be closer to the actual deadline. That might be the end of October or so, and until then, we might not see any real signs of progress. Until then, that might keep the pound under some pressure, but eventually, ultimately, I think a deal is still the most likely outcome, and that could set the stage for an eventual rally in the pound.
Marios, thank you so much for joining me and having a look with me at the week ahead, and thank you for watching the Weekly Outlook here at XM.com.